Hello, welcome to Business Incorporated. I'm Ladi Williams. Coming up today, Tunisia gets World Bank support to develop catastrophe insurance. And Ethiopian Airlines joins African Union to launch Trusted Travel Pass program. And IEA projects world oil demand to rebound by 5.5 million barrels per day in 2021. But first, let's get the markets. Investor sentiments here in Africa were mostly positive today. And Nigeria's main index rose 0.47%, driven by a 3.50% jump in the banking sector, while the GSE surged 0.70%. On the flip side, EGX 30 shaved off 1.4%. Kenya closed positive on Wednesday. And sentiments were mixed in the Gulf region. The Qatari index jumped 0.92%, while Saudi Arabia's market declined by more than 0.5%. In the UAE, Abu Dhabi's index fell 0.18%, while Dubai's index added 0.12%. And European stocks moved slightly higher today as markets around the world react to the Federal Reserve's latest outlook on the U.S. economy. Conrad is standing by now on the floor of the Frankfurt Stock Exchange to tell us more. Hello, Conrad. Great to have you.
Good afternoon, Ladi.
Good afternoon. After a huge rally in Volkswagen's shares this week, the car maker is now Germany's most valuable company after Dieselgate. One would have thought that the Volkswagen story would be over. Now the car maker has returned. How did that happen?
Well, Ladi, let me give you 3 words as an explanation. Bold, decisive, uncompromising. That's the way how Volkswagen has shifted its strategy towards electric vehicle. You're right, up until recently, most of the headlines around Volkswagen had to do with the Dieselgate scandal. Also, up until very recently, Volkswagen, a very traditional car maker, was considered to be, by many on the markets, just a boring old OEM, an original equipment manufacturer. People said car makers like Volkswagen just were dead. They just didn't know it. This all has changed with very bold announcements by Volkswagen this week about a shift to electric. By the year 2030, the aim is to release 70 pure-play battery-powered cars, battery-powered models. 35 billion euros are going to be invested in electric strategy. New people are going to be hired. All this is behind this. All these numbers are behind this success of the share price this week. These are the numbers that investors wanted to hear and that they are betting their money on now.
Really bold moves, I must say. Well, the German share index DAX has climbed to a record high today. The market seems to be savoring the Federal Reserve's decision to leave interest rates and quantitative easing unchanged and allow a little more inflation. Hello, Conrad.
China.
Yeah,
in terms of the inflation, the central bank sees inflation running to 2.4%. That's an increase, a significant increase compared to the previous forecast of 1.8%. Still, the monetary policy in the US is to remain loose and generous. Interest rates remain in a range between 0 and 0.25%. And every month, the Fed will continue to buy assets on the markets worth up to 120 billion US dollars. That's what people on the markets are calling a Goldilocks scenario. Growth rates for the economy intact, a positive development on the labor market, but at the same time, a very generous monetary policy. This is what really has caused the optimism on the trading floors and the increase of the DAX, and that's where we see the DAX today with a new record high.
All right, Conrad, thank you so much for the updates. Do enjoy the rest of your day. So after a dovish performance from the U.S. Federal Reserve last night, investors are looking to hear the Bank of England's view on the state of the U.K. economy. Let's cross over now to Juliana for more updates from London. Hello, Juliana. Well, the Bank of England decision is on focus today. Andrew Bailey should be briefing now. Any hints on the BOE decision?
Yes, it's in, and just like The Economist said, no changes. Interest rates stay at 0.1%, which is a historic low, and no change in its stimulus plan. So quantitative easing remains at £895 billion. There was a very brief statement released in their minutes. I know people are still mulling over them. They said the outlook for the economy, and particularly the relative movement in demand and supply during the recovery from the pandemic, remains unusually uncertain. It continues to depend on the evolution of the pandemic, measures taken to protect public health, and how households, businesses and financial markets respond to these developments. I know we're going to go into the details on the markets, but the pound and the markets were all lower as soon as Andrew Bailey released that statement.
So how are the markets already pricing in the decision?
Yeah, so as I said, the last time I checked, the numbers were up. They're down now, and they've been up and down all day, really. But we do have a little bit of developing news here in the UK, which is about the vaccine programme. Matt Hancock, the Health Secretary, is currently delivering a statement to the House of Commons. Britain's vaccine programme is one of the most rapid in the world. I believe 49% of the adult population have received their dose. The majority of those with underlying health issues, or the first 9 categories, have had either a Pfizer or AstraZeneca vaccination, but the NHS have asked local health authorities to stop taking any bookings any further. Now, I believe this has got something to do with a batch that was supposed to be coming in from India. It was supposed to be in this week. That has been delayed. I believe there are about 10 million doses. Now, this is a major story for the UK, especially for the markets, because, of course, we are in the midst of a third national lockdown, and part of the phasing of the lockdown is down to vaccinating the population. Of course, we've had one of the highest death rates in the world, and Boris Johnson said that he will not be opening up the barriers until we've gone through this vaccination plan. Now that vaccines for the under 50s could be held up by a month, this could have severe ramifications. I believe Matt Hancock right now is trying to ease the woes and the anxieties of backbenchers and the opposite lawmakers, because we know that the economy is in a tatters at the moment, and people are desperately hoping they can get out, which is why a lot of people are mulling over what Andrew Bailey has said, because they're not sure whether or not this is going to affect the UK's economic outlook. So, major developing story here in Britain.
Oh, thanks for that update. Really big news there. But consumer campaigners are urging the government and city regulator to intervene in a rescue scheme proposed by the subprime lender Amigo, saying it could enrich the firm's directors, while some of Britain's poorest borrowers miss out on up to £1 billion in compensation. How are analysts seeing this?
Yeah, this has been a story groaning over the past couple of years in the UK. Payday loans. Regulators have really been trying to crack down on these loan companies that make huge amounts of money on people who are typically quite vulnerable, and they take out these loans with very high interest rates. Amigo Loans, the company in question, they are the most complained about subprime lender in the UK, the biggest provider of guarantor loans. So if you want a loan with Amigo Loans, you've got to get a family member or a friend to guarantee that you'll pay this back, sometimes at an APR of 49.9%. Now, their founder has gone to the High Court, saying that it's going to be impossible for them to pay back a compensation, because if you are successful with the Financial Ombudsman in saying or claiming that these companies have basically put you into ruin because you took out a debt and didn't know you'd be paying back so much, months, you are entitled to receive back 100% of that loan, plus the interest rates. Amigo is saying this could reach up to £1 billion, and they will go into administration if they have to do that, which would mean they wouldn't pay back the loan. Now, the reason why campaigners are not happy is because if the court in the next 2 weeks decide that they can have this payment scheme where they would only be paying back up to 15% of compensation, share prices will go up, and a lot of big shareholders would have a payday at the expense of families who are struggling at the moment. So it's a massive talking point. I think I spoke about this with Chimmy a couple of days ago about Provident, another payday loan lender. So yes, a lot of people not happy that once again, the corporate giants getting the money at the expense of those who are less privileged.
Can imagine. Well, we'll keep tracking that story to see how it unfolds. Anyway, thank you for the update and do enjoy the rest of your day.
Thank you.
Well, Asia-Pacific markets broadly advanced today as investors cheered after the U.S. Federal Reserve's policymaking committee overnight voted to keep short-term borrowing rates near zero in a widely expected move. The Nikkei 225 in Japan rose 1.01% to 30,216, while the Topix index added 1.23% to 2008.51. South Korea's Kospi climbed 0.61% to 3,066. While in Hong Kong, the Hang Seng Index rose 1.21% to 29,384. Chinese mainland shares also advanced. The Shanghai Composite rose 0.51% to 3,463, while the Shenzhen Component added 1.12% to 13,963. Australian shares bucked the general positive trend with the benchmark ASX 200 slipping 0.73% to 6,745 index points as most sectors declined. And futures contracts tied to the major U.S. stock indexes were mixed today after the Federal Reserve said it does not currently expect to hike interest rates through 2023. Dow futures rose 67 points, pairing some of its earlier gains. S&P 500 and Nasdaq 100 futures fell 0.42% and 1.09% respectively. Fed Chair Jerome Powell reiterated that the central bank wants to see inflation consistently above its 2% target and material improvement in the U.S. labor force market before considering changes to rates or its monthly bond purchases. The key message from Wednesday's Fed meeting is that the committee expects to be extraordinarily accommodative for a very long time to come, even as the economic outlook brightens. An International Energy Agency has released its oil market report showing that world oil demand is expected to rebound by 5.5 million barrels per day in 2021 after contracting by 8.7 million barrels per day in 2020. According to the IEA, consumption appears to be slightly higher than expected in the first quarter of the year, supported by cold weather in northern Asia, Europe, and the US. A stronger economy and vaccine deployment will support growth in the second half of 2021, reducing the oil demand gap. The report shows that global oil supply fell 2 million barrels per day in February to 91.6 million barrels per day after a cold snap shot in U.S. production, and Saudi Arabia made an extra cut of 1 million barrels per day. Meanwhile, oil prices dropped for a fifth day in early trade after official data showed a sustained rise in U.S. crude and fuel inventories, while the ever-present pandemic clouded the demand outlook. Brent crude was down 0.2% at $67.88 a barrel, while U.S. oil was also down 0.2% at $64.48 a barrel, having fallen 0.3% the previous session. Government data on Wednesday showed U.S. crude inventories have risen for 4 straight weeks after refineries in the south were forced to shut due to severe cold weather. And domestic commodities market update is next when we return from the break. Do stay with us. And our commodities market update today, we're turning our focus to maize. Maize, also known as corn, is the most abundantly produced cereal in the world as it's grown in every continent except Antarctica. Maize is the most important cereal crop in sub-Saharan Africa and an important staple food for more than 1.2 billion people in sub-Saharan Africa and Latin America. The first female an African, Dr. Ngozi Kojewele, is now the Director General of the World Trade Organization. And Nigeria, as a member of WTO, is being called upon to liberalize trade through open borders. Let's talk more about this now with Favor Oguniraye, a research analyst at financial derivatives company. Hello, Favor. Great to have you.
Thank you for having me.
Yeah, so recently, Nigeria imposed restrictions on maize importation, granting short access to only 4 companies to import about 262,000 tons of maize. How do you reconcile these restrictions with the new stance of the WTO?
Okay, so we know that trade liberalization is one of the issues that the World Trade Organization wants to address. And then we have Nigeria being a member who has imposed restrictions on the importation of maize. And not just maize, we're talking about other commodities as well. And the reason for this importation would be to encourage production. So the question we're asking now is, have we achieved that? Have we increased production? And the answer is no, because the agricultural sector has faced major challenges. It's still facing major challenges like insecurity, poor storage facilities, and supply shortages. So now that Nigeria is in a situation where they have to adhere to the rules and the guidelines set by the World Trade Organization, that would mean that they have to lift those restrictions, not just to comply, but also to prevent food crisis.
So maize is a multi-purpose commodity and its demand weighs on institutions, corporate and retail. In 2020, the price of maize in Nigeria drastically increased by 67% to about 150,000 naira per ton, while food inflation rose by 21.79%. Do you expect to see a continuous increase in 2021, and how will this affect the price of the animal proteins and ethanol?
I think the fact is that there is a demand gap. So what I'm trying to say is that the demand for maize is growing faster than the production. So, and like I said earlier, there are some factors that have hindered the production of maize, and those factors are still present. So that means that the price of maize will continue to increase unless these factors are addressed. And that would mean animal proteins like milk, eggs, and chicken will keep increasing, because the increase of maize price means more production costs for manufacturers, for producers, and this is the kind of cost that we consumers will end up bearing at the end of the day.
All right, let's look at other African countries now. Kenya recently imposed a restriction on maize importation from Tanzania and Uganda because of the levels of mycotoxins in the maize were above the safety limits. Research has also shown that these compounds can damage DNA and cause cancer in animals. What quality control procedures have been put in place to ensure that maize production and importation is within safety limits in Nigeria?
Okay, recently we saw that a workshop was organized by the Ministry of Environment on the control and prevention of mycotoxins, and that is encouraging to know that they are creating awareness on these health dangers. So, and we also see that the ministry is advocating for effective technology programs in order to adequately detect these toxins in grains. But that is quite encouraging, but that doesn't just stop there. So there needs to be more awareness targeted especially towards farmers. They need to be aware of these dangers. They need to know that they need to put good agricultural practices in place in order to limit the health dangers. And also, the government needs to employ skilled personnel that would effectively utilize this technology so that toxins in grain will be detected properly. And so, all I'm trying to say is that there needs to be a sustainability plan.
All right, looks like we lost Favor there, but anyway, we'll try and get her back if we can. But let's move on now to the other stories. A North African country of Tunisia is to get World Bank support and funding to help it develop its catastrophe insurance market and cover people and assets against the impacts of disasters and climate-related events. Tunisia currently has a very low level of insurance penetration of around 2%, and so the World Bank, alongside the French Development Agency, are financing $50 million each for a total of $100 million into a project to strengthen and enhance disaster and climate resilience in Tunisia. Key among the initiatives is the development of a catastrophe insurance market with both households and businesses currently largely unprotected. Tunisia faces impacts from a range of natural hazards, including floods, droughts, landslides, forest fires, sand encroachment, and snowstorms. The World Bank also says Tunisia is considered highly vulnerable to climate change, with adverse impacts from increased temperatures, reduced precipitation, more serious water shortages, and rising sea levels, all anticipated. And Ethiopian Airlines has partnered with the African Centers for Disease Control and Prevention for the implementation of the African Union Trusted Travel Pass to make continental travel easier and safer amid the COVID-19 pandemic. According to the airline, the Trusted Travel Pass program will ensure that country regulations regarding COVID-19 travel requirements are met with minimal room for error and hassle to the traveling public. Africa CDC has mobilized a broad multi-stakeholder public-private partnership with the help of its strategic partners with the objective of addressing current challenges posed by the citizens and institutions in accessing accurate health information. High cost and inconveniences in cross-border travel and poor data for health policy and biosecurity planning. Customers of Ethiopian Airlines will now enjoy hassle-free travel experience with their travel pass, helping them verify whether their medical information meets various COVID-19 regulations of their destination. And gold prices rose to a more than 2-week high earlier today after the U.S. Federal Reserve reaffirmed its stance to keep interest rates near zero until 2023. Although the safe haven metal gains were capped by its forecast of a strong economic rebound, spot gold rose 0.3% to $1,749 per ounce, while U.S. gold futures jumped 1.3% to $1,749. Elsewhere, palladium gained 1.5% to $2,606, extending its rally to the highest level since March the 2nd, 2020. Silver rose 0.4% to $26.44 an ounce, and platinum was up 0.4% at $1,217. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.